Good afternoon. George Cavaligos for HFT Bonds. Well, the trade last night was a good one. Today was blah. I should have bought that dip this morning and didn't, and I don't know why. I thought we'd see a stronger equity market. 1424. I was looking for 1431. That was the previous fourth wave of a lesser degree. I thought we would test that. We still might. Today's bearish engulfing pattern, like in all these other markets lately, what we've seen are these reversal days fail after the next day. Where so we got a bearish engulfing pattern with a higher high, lower low, and a lower close in the equities markets today. Go down a little bit tomorrow, satisfy the minor trend change indicator, and then reverse again. That's the kind of stuff we've been seeing so much lately. I don't know what's driving this stuff. The markets are just getting harder and harder with these reversal signals that fail the next day. They don't really fail. They meet the minimum objective and then they reverse immediately again. It's getting crazy. But we'll go along with the flow for the moment. Kind of a similar situation like we saw in the treasuries today. We had the bearish closes. We didn't get outright signals on Friday, but the way we rejected the highs, we followed through a little bit today and then snapped right back. And now we have buying tails below the market on the treasury charts. So I'm thinking up a little bit tomorrow and then maybe fail again. The one thing I'm looking for, and this is an old, treasury trader's trick, if you look at the rollover gaps, how the charting system switch from the D's contract to the March contract, they leave chart gaps above the market. I think it's 133.22 to 25 in the 10-year, and I can't remember where it is in the bonds. But there is a tendency for the market to go back and fill those chart gaps. It's consistent. I haven't done any scientific studies, but I guarantee you, if you look back over all the rollover gaps, there's a tendency for the market to go back and fill them consistently. So I'm kind of looking to buy a dip tonight. We'll see if we can get back down to the daily opening ranges. That was 133.11 plus, and what was it, 149.13 in the bonds. I don't know if we're going to dip that much, but I want to put the bug in your ear here. We want to buy a dip tonight, tomorrow morning. Fed's buying bonds again, so we'll play the game. We'll buy the dip tonight and we'll sell it to the Fed tomorrow in the buyback and walk away, I guess, is the way to look at it. And don't get whipped around again. I didn't get whipped around today. I waited for this bounce. I scratched my short up here basically. I think I might have made half a tick on one part of it, but minus commissions, it's a scratch. Beyond that, I don't have much to add right now. The nonsense with the fiscal cliff being, negotiated via Twitter is mind-boggling to me. Infantile. They're not teenagers, talking about their neighbors and stuff. These are the guys running the country of the United States of America, and it scares the bejesus out of me. Okay, that's about it. Look to buy a dip tonight, sell it into the Fed tomorrow, and then we'll see what happens from there. That's the game plan. It's been working decently. Good night, everybody. Have a great evening.